Greetings everyone, Joseph James here from theschooltrade.com. Today was March 3rd, 2010. Here's your live trading recap. We had a pretty challenging day in the market this morning, guys. We made our way through. We've made some money on the way. Before we talk about the trades we took today, guys, I want to remind you about the 3 important links on the YouTube page. If you're watching this video right now on the YouTube page, in the description, 3 links. One for our blog. Got a brand new article posted on the blog on March 1st about dollar index trading. We have, of course, our 12-month track record and our free 3-week trial. So 3 important links, guys. Check those links out in the description and use them accordingly. Let's see. 2 trades today, guys. Had probably one of the most demanding days in the market today we've seen in a long time. We'll talk more about that in a second. We brought in 40 ticks or 4 ticks or 40 USD, so barely got above the break-even level there. And we'll talk more about that as we go through the rest of these videos today. But 40 bucks, it brings our weekly total, guys, to 1,500. We're back above $700 a day now and over $20,000 in the year of 2010 so far, guys. We'll keep you guys posted throughout the rest of the month. Now, what's the most important that happened today? Well, let's recall yesterday. Yesterday, we had a huge day, and we talked earlier this morning about how we don't want to allow a big day yesterday to cloud our judgment on a day like today. Okay, now, we want to make sure when we come into a day like today that we're not still, kind of having some leftover emotions from yesterday's trading because we did so well yesterday. We don't want to be overconfident. We don't want to be too conservative either. We want to be just want to be natural in the market, using our rules to qualify high percentage patterns. Don't force it. Right? Today was a tough day. Okay, we saw a tremendous amount of feedback from the market earlier on in the day today, 7:45, 8 o'clock today. Enormous amount of feedback from the market that told us exactly what to expect. We knew by looking at the market this morning, guys, today was going to be a pretty tough day. Don't force it. Okay, the market's not going to change for us. Okay, I can't convince the market to start moving faster just because I want to take some trades. And of course, this morning we had to wait it out. It all starts with identifying the market correctly, though. Okay, we knew we had whatever the situation was based upon identifying ahead of time, okay, what was in the market. So look at the market ahead of time, identify it correctly, and then adjust your plan of attack according to the market environment. So this morning, we saw certain things, right? Red pace of the tape, flat trigger lines, we saw lack of big money in the market, and we saw also the lack of speed, which means you weren't seeing things set up quickly in the early morning hours this morning. Okay, now, we were always looking for why these things are happening, right? As day traders, we oftentimes are trying to, work, okay, is it a news event? Is it an issue in the market? Is there support? Is there resistance, right? Why isn't the market doing what we want to do right now? Guys, remember, as day traders, most of the time, we're never going to know why the market ends up doing what it does, right? These outside influences we have no control over. Now, maybe the big money out there, right? Maybe they have the money they can spend on the research they need to really know why this stuff's happening. But guys, we're day traders. We don't know this information. We don't have those resources at our disposal. So sometimes, in fact, almost all the time, things will happen in the market and we may not know why. This morning was a good example of this, right? We opened up our chart this morning, and here's actually one of the things we saw. On the dollar index, now one thing we saw this morning was choppy sideways market in the dollar. Now this is a snapshot of the fast time frame here in the dollar. Let's take a look real quick here, because you can see the fast time frame of the dollar here, of course, more on the right side of your screen here. You'll see the fast time frame has this very sideways, right, choppy environment here on the dollar. Now, of course, looking at the fast time frame, we're looking for speed and trend on the dollar. So we see right away on the dollar, right side of this chart, we're seeing, of course, sideways trend, but then we notice we started to run up here. Started making a run to the upside. Now, as you guys know, what is the correlation? The correlation of the dollar is negative. So we have, as you can see here, overhead resistance on the dollar, which translates into support on the crude, right? Negative correlation, overhead resistance leads to support below on the crude. Now, this is a great example because we were looking for a breaker pattern short here. Now, if you follow me over to the lower left-hand side here, right, this is what we call a double whammy today, right? Double whammy. We had a breaker pattern short on the crude below the 80-10 level here. And we knew it was going to be high risk already. We had less than 6 ticks. We had a big round number of 80. And then we looked over on the dollar and we saw overhead resistance. So a great example, guys, here on the crude, using the dollar to identify when a trade may be a little bit too high risk for us to be working with. So naturally, we're happy that we skipped this trade because you can see it reversed right back up against us here. But again, looking at the dollar, overhead resistance translates into support below, right, on the crude. We stay away from the short side on crude because we saw resistance to the upside on the dollar. Now, here's what the biggest problem was today. Let's keep moving here. Snapshot here of the momentum indicator. Here is one of the biggest things we saw today in the room. And this happens all the time. Days like today, we have relatively low volume, but a lot of indecision. The volume wasn't really the concern today. The concern was the indecision. And what I mean by that is we were seeing momentum pointing up, but huge sellers in the tape, right? Conflicting information, right? Buyers, momentum pointing down. That doesn't work, right? Sellers, momentum pointing up. That does not work either. And this is a great example of what we were battling with all day today. Now notice, upper right-hand corner, right? Looking for a two-step short. See that, guys? Two-step short. We got the high of day up top here. We're looking for the break below that low for a two-step short on the crude. So if we're looking for a short trade, I'm looking for big sellers and momentum pointing down. Now follow me, guys, down to the bottom here, lower right-hand corner, and you'll see the momentum indicator. Now the momentum indicator gave us trouble all day today. Just when we thought we had a good trade to put on, boom, momentum shifts against us, and we have to stay out of the trade. This was our biggest obstacle today. Because if you follow me over down to the left side here, you'll notice we saw nothing but big sellers. We had strong green pace of a tape, right? Momentum for the most part was pointed down, but then right at the last minute, it curls and points back up. Now when you see things like this, notice the momentum indicator is oversold and having a hard time pointing down, right? It keeps flipping back up on us. And that was pretty much the obstacle we had to deal with today. Being confident getting into trades means knowing how to use our rules. Our rules tell us momentum should be pointing down for a short trade. We want to see big sellers in the tape and fast speed. We saw all of that today. But unfortunately, it didn't get the job done for us because we never saw momentum really line up for us here. And that was the reason why we didn't take very many trades today. We have to follow our rules. We can't forget the rules that made us money yesterday are the same rules that will keep us out of these treacherous times today. All right, guys, so a very good example of what we're trying to work with here today on all the markets across the board today. We took two trades today, one 11.05 and one 11.10. We spent most of the morning battling this price action. The first trade here today, guys, 11.05 on gold, short-term trend is up. You can tell that by looking at the slope of my trigger line here. We break above this red line. We mark up our swing high, right? We had so many big buyers that jumped in, momentum pointing up down bottom. So everything lined up properly. But as you can see, what happened was very, very choppy, right? Looking at this price chart here, look at how choppy this price action is. You know, we probably would have stayed away from this under normal conditions, but as always, we try to take as many trades as we possibly can in the room according to our rules. This one fit our rules perfectly. We got in the trade. 43.3 was the fill. Move our stop to entry point. After we saw momentum then curl and point back down the bottom of this chart. Once we saw momentum curl against us, stop was moved up to our point of entry, but by the time we moved the stop up, it had already come down and bitten us. -3 ticks on our stop times 4 contracts is -12 ticks or $120. So the first trade of the morning here was a loss. We never like taking first trade losses, but sometimes we can avoid them. This is a great example, though. When we saw this trade happen in the market this morning, it was one of the first examples we had to trade this morning, and then it was a great example of what we want to avoid. Right? The market really wasn't in a position for us to really trade with much confidence this morning. And because of that, we sat on the sidelines for most of it.